Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up for this really not-so-lovely day. It's truly Wednesday, January 24th, 2018. Alright people, before I even get started, I'm going to ask for your help, especially if you're one of my team members, and there are tens of thousands of you all over the world. I'm going to cover a few things here that may actually be the most important topics I have ever spoken about, because today something occurred that must be understood for what it is, and I'm going to cover again a bunch of dynamics here. Let's start off with this. The stock market today had an epic ride. At one point, the Dow Jones Industrial Average was up almost to 200 points. Then, all of a sudden, for what seemed like for no reason, we had a hard reversal. The Dow Jones Industrial Average dipped into the negative 100 points, finishing up for the day about 55 points, while both the NASDAQ and the S&P 500 finished in the negative. So what happened? What drove this today? You will not hear what I'm about to tell you on any of the financial channels. They're going to try to cover this up, and most of them probably don't even know what drove the market today. However, they are talking about the dollar, and it's falling off of a cliff. Nobody that I know of out here has been ringing the alarm louder than me with regard to the dollar. This entire year, going back for a few months, I've been explaining to you the meltdown that has been occurring, and today was the finale, and that's what drove the market. It has to do with Treasury Secretary Steve Mnuchin. Now, why did the market gyrate like this? Let's just get it out here, and let me explain this to you in a very plain language. The United States has now had a material change regarding monetary policy. A material change regarding monetary policy. Earlier in the day, when stocks were vaulting higher, Mnuchin came out talking about how the weak dollar is good for trade. However, what rocked the market, and this is the kicker here, people, Mnuchin is now abandoning the strong U.S. dollar policy for a stable U.S. dollar policy. I mean, it's tremendous, and it rocked the market. Why would it affect the market like that? Let's go over that just real quick. Again, this is a material change in monetary policy that we have not seen in probably, I can't remember the last time. The U.S. always has or has had a strong dollar policy, despite what's actually going on with the dollar. This is why there are so many dollar bills out here, because the U.S. has maintained a strong dollar policy. Now, Mnuchin, no more strong dollar policy. It is now a stable dollar policy. Again, talking about how the weaker dollar is good for trade. Okay. The fact that the United States, under this guy here, under President Trump as well, because he knows what's going on, quite obviously, this material change is a dynamic in this market that I don't believe the market actually liked. Why? Again, this material change in U.S. monetary policy should warrant a credit rating downgrade. Nobody is talking about this, but it's a fact. It's just like, for example, if you were applying for credit or whatever your credit score might be, and there's a material change in whatever it might have to do with your financial stability, well, guess what? Your credit score would change. It's the same thing here. It's humongous. Now, not only is this huge, and you saw how the market reacted today, we're going to see how this bleeds out over the next couple of days. It also lets us understand another dynamic that I've been speaking about like every day. That is the effect of what bonds are doing. Now, this morning, I explained to you how the U.S. 10-year yield was 2.61 at that time. Bond yields did creep up today. The 10 years 2.65, I believe. That's because bonds sold off also on the back of this news. But there's also a compensatory mechanism going on here. So let me speak about that a little bit. Now, a lot of you out here who follow my work have heard me talk about Jeffrey Gundlach, and he had a red line here. He put his red line with regard to the 10-year yield at 2.63. The material change today put out by Secretary Mnuchin changes that dynamic big time. Big time. And I wish, I don't know Jeffrey Gundlach personally. I wish I did. I would call him, because this pushes his red line further out. There's no doubt about it. It pushes it further out. And that's my opinion. Again, this is why I'd like to talk to him. The weaker dollar is being somewhat compensated by a rising rate environment. Okay, this is what the Fed wants. The Fed wants to create inflation. We've been talking about this. But you've got to be nuts to hold a bond here, despite what we're seeing, especially in light of this new material change in U.S. monetary policy. It's tremendous. It's absolutely huge. So, it's going to be interesting over the next several days to see how this affects the markets. And, again, if a credit rating agency decides to say, hold on a minute, there's been a material change in U.S. monetary policy, maybe we should have a look at U.S. debt credit rating. You understand? It's incredible what has happened. And I think, honestly, that more than likely, the financial experts on Bloomberg and CNBC, this just flew right over their head. They don't even have any clue. Some of them do. But most of them, earlier when the market was going down, they were like, what's going on? Why is the market off of its highs? And I started digging. I didn't even know at first. I'm like, what happened? What happened? Then all of a sudden, bam, I found this. I'm like, that's it. There you go. Sometimes you got to do a little digging here. Now, I did not enter a new position today. All of you understand what I did. I closed SPY pretty close to the highs of the day. Very good trade. If I would have stayed in, I would have lost cash. So I timed that pretty damn well. But I didn't buy anything else here. I want to see what happens. I want to see how the market swallows this. I want to see how it's being covered by the news media, by the financial channels. Because understand, this is the biggest thing to happen to U.S. monetary policy, in my opinion, since the 2008 market crash and quantitative easing. This is humongous. I cannot stress that enough. Now, if you notice what happened here, gold vaulted higher, silver put on like 3%, cryptocurrencies went higher almost across the board. So, also understand this. You just got poorer. You lost purchasing power today big time. It's going to continue. How many times have you been hearing this guy sitting here explaining to you that this dollar, there's no end in sight to it? Every single time this dollar has tried to recover over the past, I don't know, maybe month or so, because I've been covering it, it couldn't do it for this reason. It couldn't do it for this reason. Obviously, there were some currency traders, big ones, that knew this was coming, obviously. So there you go. It's no secret. Look, I am more than certain that this change in U.S. monetary policy was broadcast to all of the major banks before it happened, so they knew before you. You understand? This is also material inside information. This is front running as well. Mnuchin is front running the banks. Look, this whole thing, it's not real, it's fake, it's rigged, and it's corrupt. Somebody's been writing comments here, and they have nailed it. What we're witnessing here, people, is a crime scene. It is a crime scene. And I hope I've put a little light onto the dynamics that are in play right now. Also, really, if you have a minute, Go over to Greg Hunter's channel. You know him if you know my work. Listen to the last interview that I did with him. I explained all of this before it even happened. Why we were going to see inflation. This plays right into it, people. Look, I don't have a crystal ball, but I think I have a really good handle on being able to put dynamics together and come up with a conclusion that is logical. And I hope sincerely that I've been doing that for you, all of you, so you can understand how to protect yourself in this environment. Become your own central bank, people. Bet against this debt. It's going to get monumentally worse on the back of this new policy here, this stable dollar policy. Now the U.S. has abandoned the strong dollar policy. This is, again, I can't get over it. It's huge. This is going to open the door to a currency war that you cannot believe. All of the other central banks are going to have to follow suit here. They have no choice. And who's going to suffer? You are. I am. Anyone who has a piece of paper on it with numbers printed on it that is being dispersed by a bankrupt government is going to suffer here. Now, people, as in the beginning of this video, I think I have covered some critical information. If you agree with me, I'm going to ask you for a favor, especially those of you, and like I said, there are tens of thousands all over the world who follow my work. If you think this has been important, please share this video. Give me a thumbs up if you're watching this on YouTube. Get it out there. Get it to let this go viral. This really should be a video that goes viral. People need to understand what just happened to them because it's going to fly right in front of most people's faces, and they know it. Mnuchin knows this. President Trump knows this. Congress knows this. The banks know this. Everyone knows this except for the American people and the people around the world that are going to be affected by this. This is a new round in the currency wars that have been going on for quite a while, outlined by Jim Rickards. This is it, people. This has now reached a new level. So please, again, share this video, get it out there, and help me out because I'm trying to help you. I'm asking for your help. People need to hear this. With that said, I'm going to let you all go. We'll talk about whatever happens tomorrow morning, and I promise you, we're going to capitalize on it. There's no doubt about it. I already have a whole thing going on here, and I'm getting ready. Talk to you in the morning. Over and out.